Today's session of Visual Jforex, I will be continuing with the algorithm development demonstration using the indicator variance. So let us head to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. The setup so far includes the instrument subscription, where the default instrument is USD JPY, then the position amount has been set at 0. Then I got these variance blocks of 15 minutes each with the look back period of 1 and 2 respectively. And to look at the price action, there is a historical candles of 15 minutes each. And then to gather the information regarding volatility, the cluster of 5 candles of 15 minutes each. We will be using its high point and low point of this cluster to look at the price difference between the 2 points, and that will give us the idea of the volatility. And then to pinpoint the exact entry point, these 10 seconds candles will be used. Now let us continue. In today's session, we will have to do a couple of calculations to define certain values. For that, I am going to use the calculation expression block. Here is we will need at least 10 pips of price difference between the high point and the low point in between these 5 candle cluster of 15 minutes each. For that, we will have to first define the 10 pips, and that's fairly simple. All we have to do is take the default instrument pip size and then multiply it by 10. For that, we have to create a new variable, pip difference 10 pips. Okay, and here it will be A1 into A2, and the result of the calculation is going to be our defined value of 10 pips. 10 pip difference. Okay, and then to look at the actual volatility, we will have to take the high points and low points of these get historical candles. For that, to get the individual data points, we will have to take the position viewer, and then we will be able to take any variable which we need. Here I think the position viewer is in not position viewer, sorry, loop viewer. Okay, so we will put this array of data, 15 minute high, low. Okay, and we will have to put this loop viewer before this calculation expression blocks. And now we will be looking at the individual characteristics of this candle 21. So we want to use this candle high and candle low, and we will take the difference of that, A1 minus A2, and it will become actual pip difference. Okay, so this needs to be greater than 10 pips. And apart from that, we won't be using many conditions. Then we will simply want that this value of variance should double at least compared to the prior value. So we will be comparing these two output values, and to define the multiplication we will have to use the twice of this prior value and then compare that value with this out 14, which is the variance of last 15-minute candle. And for that also we will have to take calculation expression again. And here this value out 15 will be multiplied by a new variable double value. So we will need 2 as the start point, and it will be a1 into a2, and the result of the calculation will be required variance value. Okay, so we want this out 14, which is the last 15-minute candles variance value, to be more than this new value, which is twice the prior candles variance value. So out 15 is double. Now let us start defining the buy side, and for that I will have to take multiple action block. Okay, I will leave some space here just in case we have to add additional blocks while defining the sell side, or if we want to change any condition. Now buy side is going to be simple. Whenever there is enough of buying momentum, we want the buy trade to be initiated, and to measure the momentum we will be looking at the variance value, and the variance value should double, and the prior candle should have closed in red, that is with price losses, and then the reversal happens, and that reversal happens with substantial price momentum. So that's what we are looking at, and as and when these conditions will be fulfilled, the initiation of the buy trade will happen. For the sell side, we will be needing the last candle to have closed with losses, while its prior candle should have closed with gains, and then there should be enough of momentum as well, and that means the variance value should double, or should become twice of its prior value. So that's how the initiation of the trade will happen. And then there is also the question of going with the pending open or market open. So we can define the setup both ways. Once we are done with the logical formation, we will also think on that. Now, first thing first, we will compare the variance values, and for that we need out 14 to be compared with the RVV and needs to be greater. First input greater than second input. Okay. Then we want the enough of volatility to be there. With this calculation will be compared with this predefined requirement of 10 pips. First input greater than second input. And we also want that last 15-minute candle, which is candle 19, to have closed with gains. For that, we will need its closing value to be higher than its opening value. And for that, we will have to look at the auto-created variables. Candle 19's closing value needs to be greater than its opening value. First input greater than second input. And the candle 20 should have closed with losses. So we want the candle 20's close to be below its opening price. First input less than second input. So these are the basic conditions which need to be in place. And then we will need to pinpoint the exact entry point, and for that we will simply use the candle 19's closing value along with these candle 23 and candle 22's closing values to pinpoint the exact entry point. So let us take candle 19's closing value and compare it with candle 23 and candle 22. Candle 22 has a look back period of 2. So for buy trade, we want the trade to happen whenever the price starts to rise above the last 15-minute candle. And for that, we will need candle 23's candle close to be above the candle 19's close, whereas candle 22 candle close should be below candle 19 candle close. So here this value needs to be less, first input less than second input, and candle 23 candle close needs to be greater. Okay, now let us arrange this block. Now we need to bring in the execution order execution block, and here we can define the entry point both ways. Either we can go for the market open. In that case, the order will be executed as and when the price moves sharply directly at the opening price, or if you want to look at the volatility and if there is enough momentum, but you don't really want to go for the market open, instead you can place the order somewhere below the market opening price if you are going for a limit order, or you can even place it above the current market price if you want. That if the price momentum is sustained, only in that case the execution should happen. So this time around we will try the not the limit order but stop order, where the execution will happen for the buy trade above the current market price. So the addition will need to be done to the current price, and we will then define the opening price for the execution of order. So let us bring in the pending open block. Okay, so here we will be using buy stop order, and this price, as we are now short on time, I will not really define the price in today's session, but I will give you the idea. You can try it out, or else I am going to come back only, and in next session I will explain to you how this is going to be done. So if and when the variance values condition is fulfilled, these conditions are met, we will be going for the stop order on the price which is going to be above the current market value. Suppose somewhere here, if the requirement of the variance is being fulfilled, then the whatever is the current market price, we will be in position to add some additional pips to that value and then place the order. So if only the momentum is sustained and price continues to rise, in that case only the execution will take place. So we will define that in tomorrow's session. So that's it from my side for today's session. I want to thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market development. Have a fabulous day ahead. Goodbye.